Good morning and welcome, Patriot Radio News Hour. Joe and Jason live on this Monday. The year of chaos continues, and boy, isn't that what we have in the markets right now? Chaos started with the Japanese stock market, the single biggest down day point-wise in history. It's another Black Monday, right? I mean, you go back to Black Monday 1987. The Nikkei was down over 4,000 points. The NASDAQ, the S&P, the Dow, all of them following suit here. Matter of fact, the Dow's down over 1,000 more points. The NASDAQ down 600, over $1 trillion. Wiped out on Mag 7 stocks, the Magnificent Seven. Just today, Bitcoin going to the woodshed. You know what? The best performing asset, I hate to say it right now, it's gold. I mean, it's down $40, but, you know, that's little, 1.7%, something like that. I mean, clearly outperforming all the other assets out there because, well, let's face it, Jason, this is a debt problem. It's always been a debt problem. How do you go bankrupt? Oh, that's right. It's gradual, right? Gradual. But remember how I always finish. And then all of a sudden, we've got a problem, right? So think about just the last three trading days, Thursday, Friday, and today, down 600, down 600. Down 1,000. That's just on the NASDAQ's even worse, right? Getting completely obliterated. And now the issues in Japan, the Japanese yen really gaining ground, huge ground against the dollar, of course. Unfortunately for Japan, right, it's one or the other, right? Either try to save your currency and destroy wealth or keep printing, but wait. They're out of room to keep printing, but this is why you're buying gold. This is why you buy silver. 800-951-0592. That is our toll-free number. AllAmericanGold.com is the website. And already, boy, you should have seen them freaking out on TV today. It's so funny. Jeremy Siegel, you know, the Wharton School Nobel laureate. The Fed needs an emergency rate cut of 75 basis points. But wait, there's more. And then do another 75 in September. He says if they don't, right, it's gonna be bad, Jason. It's gonna be bad if they don't give away a bunch of free money.
Didn't Japan just raise their rates?
Yeah, by a whole quarter point. A whole whopping quarter of a point. This is what I'm talking about. This is what started it all, right? A quarter of a point in Japan.
We had mentioned, I think last week, we're just talking about, you know, how since the housing crash in 08, 09, how it seems like they've been sort of slowly trying to, you know, push Japan down. I mean, they had the second largest economy. It just seems like everything about that. They have the worst GDP to debt ratio in the entire world, and they got to, you know, that's something you got to take care of. This is a world system, and we mentioned, I think it was last week. It's like, well, what is Japan is probably going to be the tipping point because it's the quietest thing. You talk about China and their economy's kind of having trouble, and then we're talking about what's going on here, and you talk about geopolitics, but the quietest thing ends up usually being the biggest catalyst, and it looks like it right now. Japan is a quarter point up and 4,000 points down on their Nikkei. So it's wow!
You
it just blew up.
The Nikkei got hammered on Friday, right? It was the second worst day ever on Friday. Then you throw in what's going on today, and again, this is something where unfortunately. It doesn't matter where the catalyst was, right? We didn't know where it was going to be. We had a I guess, less than stellar jobs number, right? Low job creation on Friday, that 0.2% jump in the unemployment rate. And then today, NVIDIA today, oh, wait, our new chip that we said was going to be ready oh, wait, it's not going to be ready. And then, currency crisis and everything else raging. And Jason, all of a sudden now, volatility's way up. Everybody's starting to question, is the United States getting ready to go in recession? I mean, Japan all but basically cemented they're going to be in a deep recession. There's just no doubt about that. Now the question is, how fast does this thing spread, and how bad is the global economy going to be?
Well, I don't think it's going to be awful, Joe. We've been saying it for a long time. It's going to be awful. It's set up, just like in other crashes, it's set up really badly. And, that's why we keep telling people to buy gold and silver to get yourself stable in these situations, because it's going to get ugly, Joe, isn't it? We've been saying it's going to be ugly, and it's going to be a long term.
We've got war drums beating, right? Iran saying that they're going to be retaliating. When is the retaliation? Reports today. Some say as early as today or tomorrow. I think, Jason, probably the sometime in, what would you say, the next week? Something like that. If it isn't this week, next week, it's something's coming. Now, I don't know if it's going to be like the last time and maybe, a ho-hum thing, or is this thing going to intensify? Is World War III getting started as we speak? That's the other thing. I don't know.
Well, intelligence last week said it was going to be the 12th and 13th. That's next Monday and Tuesday. So that's why last Friday I said, well, I think the market's going to just go down all week next week until they see whatever show ends up on the television, Joe.
Patriot News Hour will be back after the break. (800-951-0592). Joe and Jason on I guess we'll call it another Black Monday in the equities markets. A quick look in here. The Dow is off just under right now 1,000 points, 960 points. The S&P down 131. The Nasdaq's down 450 more points. The Nikkei this morning was down 4,450, down 12.5%. The Kospi, not much better, down almost 8%. In Europe, across the board, everything was down there. The 10-year note at 377. Gold, here we go, man, making its charge again. We saw this Friday, too. Remember, gold was down on Friday, finished, almost even. Right now, down 35. 24.08 on gold. Silver at 27.33 right now. And, Jason, we've talked about the need to be diversified. Are you figuring it out? This is a boom and bust cycle. This is the cycle they've created. We've seen all the warning signs, right? It's been very gradual, hasn't it? Right? We slowed down a little bit last year, and every quarter seeming like this year, a little slower. Then all of a sudden, it's been like an avalanche of bankruptcies and store closings, anything consumer related here, everything just getting slaughtered. But then you had the Mag 7. Now they're in trouble. And then, of course, we've been talking a lot about Japan. We've been warning you that it's coming. We didn't know if it was going to be Japan. Was it going to be Italy? Was it going to be France? Was it going to be us? Who knew? But here it is. Be ready now. Did you wake up? Have you woke up? Kids are back to school, right? Time to wake up again. Vacation's over. Get diversified here in a big way. This isn't going to be some garden variety. Oh, well, it went down 5% or 10%. It's not what it's going to be. It never is. We know what it's going to be. Why not lock it? You can get up to 10.25% with our buddies over at Y Refi. Not correlated to the stock market. How nice would it be if you woke up today and said, "Oh, I'm not worried. I'm not worried." But the NASDAQ's down, what? I don't even know, 12, 13, 14% in like the last 3 trading days. And it's just the beginning. If you have $50,000 or more, that is the minimum. That's kind of, the one thing about it. Got to have at least $50,000. You can use an existing IRA. You can use, some of you can use a 401k, money in your bank account. InvestYRefi.com. That is the website. Just call them. 888-YRefi24, because it's not correlated to Wall Street. That's why we like it. That's why we like it. And speaking of Wall Street in general, stocks and bonds in general today, Jason, it's something where when we're talking about the worst point drops in history, there was this thing called the yen carry trade. It's like a $20 trillion market. So Japan has had essentially almost negative rates. So you could borrow money in yen for almost nothing. It's almost free. And then buy stuff with it. Right? I'm going to borrow. Why borrow in dollars when I'm going to have to pay 3, 4, 5%? When I can borrow in yen and pay almost nothing. Well, guess what? Boy, did that end quickly. And now all of a sudden the Japanese yen gaining strength here. And it's something where, Jason, this was a big, big deal. You're talking $20 trillion that all of a sudden is like, whoops. That's not going to get us any more free money anymore. We're out of free money. And this is exactly what we're talking about, is when you no longer can just sit there and say, let's just create a bunch more money, and somehow, magically, things are going to get fixed.
Yeah, well, it just makes things worse. And, Joe, you've been doing this longer than me. Is you just sit around and wait. How long can they do this? How long can they do this before something fundamentally has to change? And that might be what this crash ends up being, is that we see some huge changes. Maybe not something that changed for the better of the people, but it's the system itself is going to be retooled, right? Money is just an idea. You can corrupt an idea. You can make it whatever you want to be. That's what I like about gold and silver. Gold and silver, you can't corrupt it. You can't change it, or you could try to rip somebody else off, like the Romans when they started shaving the coins, right? But anything short of that, you can't really do anything to make the gold less valuable. It's just it's a commodity, and money can be, it's whatever the idea, right, Joe? Whatever they make up. But when they make it up, there's always 10 letters in the whatever the new thing they make up is, right, Joe? Why do I get the feeling we got a couple of 10-letter words coming up in the months and years to come to say, well, this is what we're going to do now? Quantitative easing. What's the word going to be this time, Joe? When they change us into a new monetary system, and if that's where we're headed, this is going to be a big one. This is going to be a big one.
Yep. We talked about Warren Buffett last week and how he was bailing on the banks. Particularly, he'll buy one bank. It was Bank of America. Now he's out. Well, he's been selling for weeks now. Then we find out over the weekend he dumped half of his Apple stock, right? This is something where, hey, if there's anybody tied in, it's this guy. He's now got a war chest. He's got more money sitting in probably in treasuries, would be my guess, $277 billion waiting this out. But, Jason, the aggressive nature of how he's selling kind of tells everybody, hey, guess what, guys? I think the bubble's getting ready to burst. I'm going to head to the sidelines before anybody else.
Yeah, there's been a lot of selling from the CEOs, right, Joe, for a while now. This is not new. This is something they've been doing for a while. They in 2019, remember how many CEOs? It was like a record number of CEOs were retiring in 2019. Remember that, Joe? Record amounts. And now you got CEOs selling. I mean, what was ahead of J.P. Morgan. He was selling his own stock for the first time ever, and he dumped a bunch of it. Remember, Joe? This has been going on for a while. It's been going on since 2023, especially. It's been going on.
And here's the other part. Isn't it amazing? Here it is, this huge down day. All of these guys out there that like to trade their stocks, right, are trying to set up, and magically there were outages all across the board today. Charles Schwab, Fidelity, Ameritrade, Vanguard, E-Trade. All of a sudden, Jason, magically, all of these places they just had technical difficulties, right? So you couldn't even go in there. Like, guys were trying to go in there and protect themselves, whatever they were trying to do. They couldn't even get into these accounts. And this is just a little precursor, because guess what? They can say this was an accident or what have you. And I'm sure they'll say, oh, my gosh, we were just so overwhelmed, right? Everybody wanted to hit the sell button, and it just overwhelmed our servers. Remember what the new rules are. How many more times do I need to tell you? At any point, if the SEC decides, this is ugly. Look at Japan. They had to shut the stock market down in Japan this morning. Right? Time out. Right? We need a timeout. But at any point, they can just say to everybody out there, I'm sorry, you can't sell today. Sorry. Maybe tomorrow. Check back with us next week. I want to get my money out of my money market account. Nah. Or maybe they will. Hey, how about a 10% penalty? You want it now? 20%? Yeah, they can do all of that stuff. They can decide to assess you, a penalty for selling. A penalty for, but it's my money. No, it's not. Every time you sit there and you sign on the dotted line, and of course now it's on the computer pad, or they send you a link and you put initial here and sign here and do that. That's a contract. It's a contract. Guess what the contract really says? It's not your money. It's our money. And oh, by the way, here's the rules that we get to play by. At any point, we can not allow you to sell. We can make you sell with a penalty. We can deny you access to your accounts. And in money markets, it's even worse, right? It's one thing not to be able to sell. I mean, right? How about today? If you who knows? Maybe you were short. You wanted to cash in. Right? Maybe you were long and like, I need to cover my position. I need to do something here. And you get sorry. Sorry. We're having a technical difference. Login unavailable. The service, it's temporarily unavailable. Right? I mean, these were the messages people were getting today. But think about this. In a money market, they could actually say, hey, sorry. Not only did we not allow you to get your money out, but it broke the buck today. So, that 100,000 you put in there, yeah, it's only worth 75 now. Right? That's it. And there's nothing people can do about it. Jason, people don't know how precarious of a position that they're really in. Same thing with the banks. We've seen it. How many times have we seen it? So many now. Hey, you know what? No. You can't close your account. No, you can't get money out. Heaven forbid you go ask a bank to give you 10 grand in cash. They freak out. Right? They freak out. This is what's happening. People don't get it.
And so many people trying to better their position, by taking out debt, hey, I'm going to mortgage the house and get into this, or I'm going to mortgage my house and get into that, right? How about those people, they mortgage their house and they get into cryptocurrencies, right? And then just as soon as just as soon as they do something like that, you get this big market crash like this. I mean, the thing about cryptocurrency people, I feel really bad for them, is that they're turning it into ETFs. They're gonna turn into the IRS and the SEC determined that cryptos were equities long ago, meaning it's going to be a stock. And Joe, just like you said, any of this electronic or paper assets that you have to ask someone's permission to put money in or take money out, it can get locked up. It can get locked up, and you are hung out to dry in this stuff, Joe. And it's not a good time to be in debt. I'll say that. I said it about a week or two ago. Buy gold and silver is a great way to protect yourself from this stuff, but also this is not a good time to be having loads and loads of debt, Joe. This thing can really swallow you up whole, Joe. And I mean, let's face it, what all those property speculators, look at how many of those guys got washed out completely in 2008 when they were holding too much debt.
Yeah, and again, it's something where already talking about emergency rate cuts, and they had Austin Goolsbee, that fool. He's the Chicago Fed president, and he says if the economy deteriorates, the Fed will fix it. See, Austin, here's your problem, buddy. You guys are the ones that broke it, not the ones that fixed it. That's what people haven't figured out yet. Patriot Radio News Hour. We'll be back after the break. (800-951-0592). Joe and Jason, Patriot Radio News Hour on this Monday. A very tough day playing out in the world markets. And again, we anticipated this. We just didn't know when. This is the starter. Is this to say it's going to be a complete disaster right now? I don't know. Could be. Could very well be. We'll have to wait and see how all of this plays out. But we're continuing to watch the markets here, as it started in Japan last night, rolling through all of the other markets today. People talking about how bad is the global economy going to be, and it's a global reset that's coming. That's what is coming. Remember last week, we got news on the digital euro, right? Shockingly. Oh, it's going to be ready we're going to start rolling out to your 2025. But 2025, it's only a few months away. We're almost there. I don't know if you noticed over the weekend, we tacked on another $100 billion on the debt just over the weekend. Yeah, get ready. It's coming. Get ready. It's coming. However much gold and silver you think you have, it's not going to be enough. Right now, I'm going to just say this. Get it while you can. $20 gold pieces, $2,600. Buy 10 or more, $25.90. And I'm just throwing a caveat. If gold continues to come back like this, we're probably going to have to go back up in price. There's nothing you can do about it, right? It is what it is. Take advantage of any of these pullbacks that you see and get in here. U.S. Silver Eagle. Silver, same thing here. $685. Below $700. Take advantage of it. Add to your portfolios here, because I'm going to tell you right now, when all of this crashes down and people realize what's really happening. I don't know if you saw the Wall Street Journal. Probably didn't, but I did. Big story on the banks covering up losses. Here we go again, right, Jason? Isn't this the problem we had last time, right? The banks are not being honest when they come out with their numbers. But, of course, they get cover from the Fed because they're saying, well, some of the banks are like, well, we would say it was more, but the Fed's not allowing us to, right? These are the things that people don't know about. And are we going to wake up one day and all of a sudden the FDIC and the central bank are talking about, hey, we're going to have to close. And I'm not talking about one or two or three banks. Are we going to have to close hundreds of banks? I mean, Jason, I see a scenario where that very easily could happen. Easily happen.
All you have to do is look at the bank closures around the housing crash. It started with just 3 or 4 or 5, right, Joe, that first year, kind of like 2023. And then year after year, it just built up, and it was hundreds of banks a year for a couple of years. And I think overall it was like 500, 600, 700 banks over the course of like 5 or 6 years. 100 banks a year for an average of 4, 5, 6 years in a row, Joe. That's we have less banks than back then, but it almost feels like we may have the same amount of bank closures this round through, Joe. So no, this is absolutely going to happen. Banks don't do well when markets are contracting. They need markets to grow so that banks can do more business and be profitable. So banks are not going to do well in this cycle that started, Joe. And I guess we'll wait for the first few dominoes to fall like we did 2023, and then it may be a lot worse this time around.
Well, now this is making the way through the news cycle. Remember, China announced in May, hey, we didn't buy any gold. It's now being reported that China did that to try to lower the price, and instead of not buying gold, actually bought the most gold that they bought all year. Now, this is through actual market trades from London, because those are 400-ounce bars, so it's pretty easy to track. And they're saying that China actually bought 53 metric tons of gold in the month of May because, Jason, when they tracked those 400-ounce bars, where they went from London and where they went and ended up in the banks in China, it was pretty easy to figure out. And I'm wondering here, because remember, we also had when China said, hey, we're not buying. Wink, wink, nod, nod. Then we had all the African nations that want to be part of BRICS. Remember, it was like, I forget what it was, like 7, 8, 9 of them all said we're going to start buying gold. And I think we're setting ourselves up here where they almost have to now, right? Because can you afford to hold the Japanese yen? Can you afford to hold the euro? Can you afford to hold the U.S. dollar? Especially now, they're talking about emergency rate cuts, right? The dollar is going to start losing ground. The dollar, like today, tough day for the dollar, mostly because of the yen. But, Jason, this has become a really big problem where all of a sudden now, especially in gold and silver, the supplies keep falling. These countries keep buying, and no matter how you do the math actually is pretty simple to do here. You've got to be your own central bank right now, and I think this is a warning shot. We're lucky right now. I'm telling you, we're lucky that the Dow isn't down 2,000 or 3,000 points, because it probably should be. It really will depend on a couple of factors as we start looking at where the U.S. economy really is. Here's what we know. We know it slowed down again, and it was significant, right? It was significant. How many chains did we just literally went from, hey, we're not even bothering with bankruptcy reorganization. We're just going straight to liquidation. Jason, that tells you how fast things stop.
That's right. And if you have things blowing up in Israel and things blowing up in Iran here in the next week, that'll feed this narrative that even though it's purely an economic situation, it'll sell big time when you add some fear into the news cycle as well, Joe.
Yeah, man, it's a tough day. But it's a warning, right? Here's another warning. $20 gold pieces, 2,600, 10 or more, 25.90 at 800-951-0592. Jason and I, we're going to be right back after the break. Eight 800-951-0592. Joe and Jason on this Monday, and why am I not surprised? Just got an email. Yeah, prices just went up. I figured they would, a $20 price increase. I'm going to hold the price here for a little. I'm going to do the best I can. Anything once we get past $24.10, I just won't be able to do it anymore. But $20. Listen, libs or saints, I don't care. Mix them up. Do what you want. $2,600. Buy 10 or more. $25.90 at 800-951-0592. And Jason, everybody's getting scared here. Was the AI bubble like the tech bubble of '01? Right? Was this thing overhyped? We don't know. NVIDIA today saying that they're having some difficulties with their next chip that was supposed to be out later this year, saying that they haven't been able to get it to work properly. And now people are starting to question, can AI really deliver on what it is that they said it could deliver on? And of course, I've been saying the whole time, all of this chip stuff, it's all for data storage, getting ready for the digital currency. That's my opinion. This whole AI hype was to keep our eye off the ball, Jason, but now they're starting to question, and especially with Warren Buffett dumping half of his well, that's a lot of stock when he decides, hey, I'm not trusting what they're telling us here.
Well, the dot-com bubble, Joe, was getting people excited about this new thing, the internet, and they got a lot of early investing and a lot of irrational exuberance. Is that some of the terms they've used? Dot-coms were huger than ever, right, Joe? It just wasn't ready. And they're trying to fuel growth in this market in America with AI, and I think most of it's just not ready, and I think a lot of it is smoke and mirrors because look at how much of the market is NVIDIA and a couple other tech stocks, right, is holding up the entire thing because everyone's hoping that this is the only place America's got for growth and for tech so yeah, Joe, I think if people find out that AI is either not what they think it is, or even that it's fraudulent what they're presenting, then you'll see a market tumble, Joe, that'll be even more extreme. Not only is the monetary system broken, and then it's held up with smoke and mirrors, but then it's like the one big thing that is supposed to grow this country in the future, if it's possibly fraudulent or it's just not ready at all. Yeah, Joe, it could be really, really bad because, what would happen if the Magnificent Seven just starts falling apart? They lose 20% of their value or something like that, Joe. Then how bad does the market go down?
Yeah, and again, we're seeing how quickly, for $1 trillion to be wiped out, and that's just on the SPAC 7s, right? That isn't the rest of the markets. That isn't what happened. Think about what happened this morning. At one point, Bitcoin was down 20%. I think it's down 15, but it was down 20. These are the things that I worry about: liquidity, lack of it, right? What happens? We saw the yen. Look at the yen today. So it's been, remember, we were talking about yen breaking 160. They got the Fed, they got to fight. The yen's at 143. 143. Last Wednesday, remember when they raised rates? The yen was almost at 160. These are unheard of moves in these currency markets, the treasury markets. I don't know why. Why would the Fed need to cut the 10-year notes down to 3.7 and change? Right? It's the market's already doing it for them. But again, the realities are pretty simple. This has been a bubble market. Too much money floating around in the system, creating these PE ratios that are so out of whack with reality, thinking that the Fed, even the Fed thinks they can say, we'll fix it. No, they're the ones that broke it. I would love it. Could you imagine an emergency rate cut? I mean, we may have the single biggest update in gold ever if they did that. I don't think they're going to. But you don't know. I don't know how bad it will be. We really didn't have any economic data today. So it's going to be interesting what the economic data looks like the rest of this week. Because if it comes in soft, I think the market's going to overreact to every bad piece of data, at least for the rest of this week, until we get some conclusion with what's going to happen with Iran and Israel.
Yeah, let's see what happens, right, Joe? It's all about let's see what happens, because you said this could be a bump in the road. It might not be, might not be the beginning of this long market downturn, but it very well could be the beginning of it right now, right here and now. It's just we don't
I think
make the decisions.
Is the beginning. Let me rephrase that, because I don't want people to misinterpret. It's already started, okay? The market downturn has already started. Does that mean? I guess what I wanted to say is I don't know. Is the Dow going to be down 10% this week? I don't know. Could be. But if they can normalize it, then we just look at this as another warning about what is getting ready to happen. And I wanted you to pay attention to how fast it could happen. Japan lost over 4% in a single day. Right? That's unheard of. I'm sorry, 4%. 12% in a single day. 12% in a single day. And I'm talking about, the Dow maybe losing 10% in a week. That is very, very possible. We'll see. We'll see what it is. It's going to be, like I said, all bad economic data is going to put pressure on Wall Street. They want Fed rate cuts, and they want them now. That's why, guess what? That's why gold's going higher. 800-951-0592. Jason and I will be back right after the break. 800-951-0592. Final segment here on this Monday. Another one of these very reminiscent of the Black Mondays of years past. The thing that we don't know yet, did we have trouble here? Did we have major hedge funds or banks on the wrong side of some of these trades this morning, Jason? I don't know. When you see something like the Nikkei losing 12% in a single day, it just makes you think. I would say several bigger players probably got caught on wrong sides of trades this morning. It's going to be interesting to see if there's ramifications of this as we learn who was it? Who was on the wrong side of the yen carry trade? Who was on the wrong side of maybe NVIDIA today, right? Who was on the wrong side of Apple? This could add to the contagion here. We'll have to wait and see. But that's something else we got to keep in mind here. When you have moves like we saw today, usually we end up with victims.
For everybody that wins in Wall Street, there's a loser, right, Joe? It's just the way it works, right? Somebody's money is being taken by somebody else. It is quite the casino that goes on in Wall Street, Joe. It is speculation. There's obviously if you know your companies, you know what's going on. You can make money with stock, but if you don't know what you're doing, it's a gamble, right? And some of these guys, these day traders, and some of these guys that are into the minute by minute trying to make their money. Yeah, you could lose really bad, really quickly, Joe.
Yeah, so that is the other thing we're going to watch. We're going to have to wait and see about data. Will Japan stabilize tomorrow, or is there more carnage still yet to come? And then, of course, like I said, how does the U.S. data look? And it's not been looking, the problem is it hasn't been looking very good lately. And then who got caught on the wrong side? Who got caught on the wrong side of the moves, especially really going back to Thursday, Friday, now into Monday? Who wasn't positioned right, and what are the effects of that going to be? And especially with, you think about these Japanese banks, it's not like these banks are in great shape. European banks, not in great shape. A lot of our what we'll call them those regional banks here in the U.S., these little banks in the U.S., not in great shape. I don't know how much those banks would play in these markets, but then again, Jason, in desperation, when you're desperate, you make desperate moves, and I think we're going to find out here in the next day or two who got caught up on the wrong side of these things. But again, don't wait for that. $20 gold pieces, 1 through 9, 2,600. 10 or more, $25.95, 2,590 if you buy 10 or more. Right now, gold's off 40, which is by far the best performer anywhere. It's at 2404. 2404. Silver Eagle, 685 as well. 800-951-0592. Boy, I can't wait for tomorrow. What are we going to walk into tomorrow? Yeah. It's the year of chaos. Anything goes. We'll be back. Jason and I coming right back with the Half Empty Cup.